when a billion-dollar lender goes broke, I pay attention. Why? Because I'm looking for tea leaves. I'm looking for indicators as to what's happening in the US economy, particularly when the stock market is as highly valued as it is today. So let's jump in and find out. First article is by Reuters. US auto bankruptcies show rising credit pain in low income households. Just a couple quotes from this article. Two auto sector bankruptcies have rattled parts of the U.S. credit market, raising concerns about a deterioration in the financial health of low income households. This is something we all need to be worried about because it's a big part of the US population. It's a big part of the spending. It's a big part of what drives the economic growth in the United States is how much you and I are spending. Both us and people in different demographic categories, different earning categories. And the article goes on to say lower income consumers have been impacted by high interest rates, mounting labor weakness, and tariffs, according to one person that they talked to. So we know this to be true, but we also need to be watching what's happening in the labor market. Now, sometimes when you're looking for tea leaves, you have to go into industry magazines that have journalists that know more about the specific industry than a general news organization might know. So for this, I came up with Auto Finance News, and they say missing Tricolor vehicles could be valued up to $1.1 billion. It's Tricolor is the company that went bankrupt. And here they say about 30,000 vehicles are estimated to be missing that are marked for repossession, according to a market source that talked to Auto Finance News. That emphasis on that quote is mine. So really important what's going on here. And the question is this the case of a company that had operational issues? Or is it a sign of a wider trend that we need to be worried about? And one of the things, if they have 30,000 vehicles missing that are marked for repossession, but they can't find those cars, that's kind of the job of an auto lender that makes loans for used cars is to make sure they know where those cars are if they ever need to repossess them. 30,000 vehicles is a lot. We're going to get to a Morningstar report where they share their views on the exact question I just mentioned. But first, I want to talk about a decision that's closer to home for you and I. And that is for those of us that are qualified for Medicare or getting close to Medicare age, is open enrollment period is soon to be open, or probably by the time you're watching this video, it is open. It runs October 15th to December 7th. Super important for you, or if you know somebody that's on Medicare, to let them know. Look at your policy every year. Really important because doctors change, the plan costs can change, and you want to make sure that you're getting the best price available, the best care available, and access to the doctors that you care about. And if you've had prescription changes for somebody you know and love has had prescription changes, that might make a different plan better for them than others. And that's why I'm proud to partner with today's video sponsor, Chapter. They are a Medicare advisor, and they are the Medicare advisor that I trust. And here's why I'm proud to partner with them. 3 reasons. First, their services are always free to you and I. Second, on average, their clients save $1,100 by making that phone call. That's almost $100 a month. And number 3, which is the most important to me, which is if you are on the correct plan now, they're going to tell you that. And that's what we want. We want somebody that knows a lot more about Medicare, the Medicare advisor's expertise. We want that expertise to benefit us. And pro tip, All Medicare advisors are about to get really busy, so you can reach them at the link below. You can also give them a call. You can call them at 323-805-8579. Again, 323-805-8579. And thank you, Chapter, again for sponsoring this video. Okay, let's jump in. I mentioned Morningstar answered the question I asked earlier, which is, do we need to worry about this being a broader trend? Do we need to worry about this being a warning sign of the U.S. economy? So let's jump into this Morningstar report. The title is Tricolor Bankruptcy, Sector Red Flag, or is it an idiosyncratic event? Essentially uh, limited to that one company. Morningstar says Tricolor, a Texas-based subprime auto lender, filed for Chapter 7 bankruptcy last week, raising questions about whether this signals a broader sector issue or is an idiosyncratic event isolated to one company. And here's the answer. Morningstar says, we view Tricolor's bankruptcy as a standalone event isolated to the company itself with no impact on the overall credit profiles of the larger, more established subprime auto lenders. Why is that important? Because again, it's an indicator to their underlying clients. And what Morningstar is saying is nothing has really changed with that underlying client. Now, how do we protect ourselves, right? Whether this is a red flag or a red herring, it doesn't mean anything. We don't know, right? That's Morningstar's guess. I tend to agree with Morningstar, but how do we protect ourselves? There's really three things. The first thing we do is get our asset allocation right for our investments. Super important. That's going to determine 80-90% of our success as investors. Number two is it's time in the market, not trying to time the market. So, regardless of what's going on with the headlines, we are in this for the long haul, which is why we have to get our asset allocation right. Why is it so important that we're in it for the long haul? The reason is market timing doesn't work. And the reason market timing doesn't work is if you miss just the 10 best days over a 25-year period in the stock market, your returns can be cut in half. And the challenge, think about how many days there are in 20 years. And trying to predict which 10 are going to be the strongest or which 10 are going to be the scariest, we just can't do that. That is the ultimate needle in the haystack. So that's item two, is time in the market. Item number one is asset allocation. And number three is to have a financial plan. Because without a financial plan, it's hard to do the first two, and it's hard to know we can spend, how much we can spend guilt-free, both before we retire, plus once we are retired. And that guilt-free part, I want you to be a happy spender. I don't want you to have to be a worried spender. And so if you don't have a financial plan, I urge you to get one. The gold standard is to work with a financial advisor. If you prefer to do it yourself, use software that's designed to help you come up with your own financial plan. The software that I like is called Bolden. It used to be called New Retirement. You can find it showing up in the link below. I am an affiliate, so you'll be supporting the channel. And if you like this video, another really important decision is when we decide to retire, which is why I made this video here. Why waiting to 65 to retire might be a big mistake. Thanks for watching this one. Bye-bye.